Hello traders, welcome to the weekly outlook and setups volume 294. Iliya here. As always, you know what we're going to be doing, having a look at the markets, how they developed this week, what kind of setups we had, and most importantly, what we can expect for the upcoming week. The trade war is back, Trump is back, and we're finally starting to get some volatility, although this week did not develop in a very clear manner. So without further ado, let's jump into it and see what we can expect. Looking at the economic calendar, so pretty much last week we didn't have a lot of news. We pretty much had only USD news on Thursday, and that was the only day that the market really moved a lot. But of course, Trump is back imposing tariffs again, and we're starting to get some more heavier headlines in the news outlets. But of course, you can see on Monday it's a bank holiday here, but only for France. There are no news as well, but I've spotted that Mondays tend to be very volatile nowadays because there is a lot of development over the weekend. And then the market usually opens up with a bang, but it's pretty hard to forecast that bang, so I usually always allow it to play out. And then of course I try to flow with the markets. So Monday I'm not going to be trading because this is part of my trading plan. And then Tuesday we're having a CPI. Okay, so that is going to be a very heavy news release right here. So again, I'm going to wait for that to be over, and then I'm only going to be trading after the US CPI. So basically I'm going to be trading New York session on Tuesday, and then everything else going forward. We have PPI here on Wednesday, we have GBP CPI as well, and then on Thursday we also have a lot of USD news here. We have some GBP news, and then on Friday we also finish up with some USD news right here. So it looks like a pretty nice week, pretty volatile as well. So I am definitely going to be locking in this week. And of course, as I told you, I'm going to be trading after the CPI is released, and then of course trying to flow with the market and where it guides me. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. Alright, as usual, we're going to get started with a Dixie. So of course, let's first have a look at kind of a market review to see what I expected to happen last week and what actually happened, to kind of give a little bit of a little breakdown of the overall kind of week of price action. So we were a little bit stuck right here as we were about to open the market. Like, we had a little bit of a bullish market structure starting to print. We had a bullish imbalance, but at the same time we had a bearish one. And I was like, here, okay, let's see which side is going to pick up. Are we going to pop higher and start traveling towards the liquidity, or are we going to pop lower and of course target the opposing one? But again, as I told you, Mondays nowadays tend to open with big bangs, right? If you do study like other Mondays as well, you're gonna see that, okay? And you can see the market literally opens and boom, right? Takes the liquidity straight on and taps into the weekly imbalance, which was kind of my overall target, okay? But then you can see what it does. It makes a new forward bullish imbalance. And this is where, everybody, your long setup comes in, okay? As I told you, right, don't forecast, don't try to go short immediately, don't try to go long immediately. Wait for the market to show where it wants to go. It showed you, it pulled back, and then it gave you a quick trade, okay? Then of course, if we just do a little review, it did not follow through with a new imbalance, so it came up to take out the liquidity right here. And then it was a very strange day here. Like, a lot of pairs were making that bearish imbalance from, for example, from this weekly zone, and we thought, okay, it could reverse. But I told my members here on Tuesday, do not take that short, because we're still in a bullish market, right? The market is making higher lows and higher highs. It actually just came for a little bit of a liquidity grab right there, made another push, then it chopped. And then it kind of, again, I remember it gave this shorting signal, which I also did like for potential shorts doing my morning analysis. However, again, I told my members, we're still going up, right? We're making higher lows, okay, and higher highs. So again, let's wait for the market to truly show us that it wants to go down before we take a short. And yeah, the market ended up popping higher, again, showing us what it wants to do with another bullish imbalance. And again, it popped higher, and we're closing up. Pretty much we are closing up taking a lot of liquidity. We took out this one here, and right now we're taking that one. And this liquidity taken was done by actually tapping into this imbalance. So right now we are ending the week pretty nicely, right? We don't have any zones to work with, and this kind of sucks because, again, we don't have any zones. So what I'm going to be telling you again, which a lot of you will not like, is we gotta wait for the market to show us what it wants to do. Now, going on to the weekly time frame, this zone is very key, but looking at how the weekly candle is closing, kind of engulfing also that zone, this is what a lot of people call like an inversion imbalance. So basically having an engulfing candle above the high of the imbalance right now. So a lot of people would say, okay, this one is failing. To me, it could still react, but even looking at the candle anatomy here on the daily time frame, you can see we kind of spent 4 days inside that weekly imbalance. If it was gonna go lower, I believe it should have gone lower until now. We have like candle 1, 2, and 3, and 4. All of them are throwing wicks to the upside, which is great. And then on Friday, we were having a little bit more of a bullish candle, so I'm still pretty 50-50. Now, if you look to the left, we have this is our next kind of reaction area. So this is where the market can start coming in. However, if we come in all the way up there, I would start thinking about a reversal. All right, because if that weekly imbalance really didn't push price lower, we shouldn't really go up here and then sell off from there, although it can definitely happen because the market is very news driven right now. And the other thing that I also like is that we're having a little bit more of a sign here for potentially buyers getting in control. We're having this daily bullish imbalance. So I do like DXY longs. However, if you just zoom out a little bit, everybody, on the macro picture, what's it doing? It's making lower highs and lower lows. Okay, really. So to me, any sort of high probability longs will be taken above that high. So I'm not really ready to say that I'm a long bias on the DXY. This is kind of the price action we had this week. Started bullish and then we just kept making higher lows and higher highs. Is it going to continue next week? I don't know. So again, if I zoom in right there, do I have any daily zones? No. We have that one, but I'm not going to be looking to trade from that one because the market really has to flush towards that zone. So this is not a good positioning here. Do we have something on the volatile time frame? No. The market ended up by taking liquidity. It doesn't have any new zones. So again, guys, like we just have to wait. So is it going to break above, show us that it wants to guide us higher? We go for the reaction area. Is it going to break lower, break structure with an imbalance to show us that it wants to go lower? We then, of course, target liquidity number 1 right here and liquidity number 2, and then of course the daily imbalance. So that is the plan for the DXY. Not extremely clear. Let's see if the other pairs are going to give us a bit more signs. EURUSD is pretty much the same as the DXY. We are pulling back into that weekly imbalance, but of course, let's first reverse engineer price and see what it did this week. It was a pretty similar one, right? We didn't have any zones starting the week, right? We didn't have any bearish zones, we didn't have any bullish zones. So again, guys, what I told you is let's wait to see where it's gonna guide us, okay? The market opens, boom. The first thing that it does, bearish imbalance, okay? There it is. What do? You take a short. Into where? The weekly imbalance. Boom. This is kind of an amazing setup to take and literally call it a week, right? Beautiful setup. You made your 2R, you're done, okay? Because how I'm trading right now is I'm focused, especially for Forex, I'm focused on 1 to 2 good trades per week. Because if you make like 2R on 1 or 2 good trades, that's 4R per week. And if you can kind of replicate that, you are going to be great. But a lot of traders think that they have to be trading every single day, catching every single move. No. Right? You need to catch the clean move. So that was it. Showed us the bias, pulls back, boom, into the weekly imbalance. And then this is where it really got tricky, right? I had some of my members like getting pretty confused. And I also got confused, like, because we were tapping into that weekly imbalance and then the market kind of started giving us potential longs. But again, I told my community members, right, look at structure. We're going down, we're making lower lows and lower highs. So just because we had a little bit of a pop right there, this still looks like a lower high. So we avoided taking this long and then the market gave us a short, okay? But when you start getting this sort of price action, this is what I call a transition area, okay? When we're tapping, for example, a weekly, a daily, probably not, but when the market is tapping into a hard time frame zone, okay, it's not just gonna tap and rocket, okay? When the market goes from a sell market, it's gonna have a transition period and then it's gonna turn into a buy market, all right? So trading into this transition area here, it's the best kind of place to enter a trade, but it's also the lowest probability one because you still don't know whether the market is gonna flip. Okay, you can see we just kept making lower highs, and if any of you try to long right from here, you gotta try to long from here, you gotta stop loss because the market came in to manipulate. Then you try to long from here as well, and you also got a stop loss, right? Why? Well, because the market was just simply making lower highs. Okay, we didn't really have a structure shift. The market was still bearish, and although we had like these imbalances, of course, you always have to use structure as well in a very basic and raw form, right? I'm not doing, for example, anymore like super refined market structure and boom, 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 and this and that. No, I just zoom out a little bit. What's happening right now? We're bearish. What are we doing? Lower highs, right? So I wait for higher highs to start forming before I start taking longs. Now, let's see what is happening right now. We're having that volatile bearish imbalance, and that is the only thing we have. That's a shitty kind of closure. Let's reverse engineer it back to the daily time frame. Do we have something on the daily? Not really. All right. Like if I zoom out a little bit, what is market doing right now? It's going up. Okay, great. We had a massive pop higher right here at the final week of June. And right now we're in a very, what looks like to be a very corrective pullback. You can see pretty much this week, apart from Monday, it didn't do much, right? Tuesday kind of indecision, Wednesday absolutely slow, Thursday was kind of a bigger mover, but also super indecisive. And then Friday is an inside bar of Thursday. So again, guys, right? Do we have any zones right now to work with? No. We have this one here. I mean, will the market tap it and then potentially reverse? That could potentially be a trade. We cannot go long because I don't have any long zones, and this is the short zone. But again, like anything could happen. This is the very recent liquidity point. I mean, I do see everybody a lot of scenarios right there. I do see the market liquidating here and then maybe turning into a sweep and starting to reverse. That is, for example, the bullish euro scenario. If, of course, the market resumes back to the overall fundamental picture, which is, of course, bearish dollar and bullish euro. But maybe Trump does some update with the tariffs that potentially changes the scenery. This would be potential short setup, pulling back into the volatile, taking some liquidity and then giving us a short. And then, as always, right, a reversal can always come in. Okay, so I would say, again, similar to the DXY, wait, because I'm not really bullish right now simply because we're making a bearish structure, and I'm not really bearish because we're still tapping into that weekly zone. I still see we're kind of rejecting it, but I really don't see the pop yet. Okay, so let's wait. That is your USD. No clear zones right now getting into Monday, so as usual, let's wait for Monday to open, give us the pop, and then we follow it. A pretty nice bearish weekly candle on GU, and I really did like it because unlike EU that had and the DXY that had a weekly bullish imbalance in this case, GU did not. Okay, this means that GU is actually weaker than the euro. So if you're looking to short something, then it better be GU. All right, and let's see. I think here we actually had a pretty nice development. Let me see. Okay, so I had 3 scenarios right here. Again, we actually tapped into that daily imbalance, and out of that daily imbalance, we actually made a 4-hourly one. And what I actually told you on the weekly outlook is that if this was a normal day like a Tuesday, I would absolutely smash that a short trade. But I still gave you all the potential scenarios, okay? But you can see the market just opened straight from the imbalance. It threw a little bit of a wick right there and an absolutely beautiful short towards liquidity number 1. And then we had another follow through here with another imbalance. Okay, this one was a little bit shitty because it came in, reacted, and then it kind of during Asia it still came in, but then it still provided an entry here within that candle during London and attacked liquidity number 2. All right, and then I'm done, guys. I'm done. I'm not gonna keep forecasting and trying to see, okay, is right now the market gonna reverse, it's gonna continue, blah blah blah. No. If I took that short, I'm done. If I took that short, I'm done. Right? Those are my 2 good trades per week. That is how I trade. You avoid over trading, you're super balanced, you're super neutral, and you're only waiting for high quality setups. Because then you can see the market really start getting choppy, and then if you continue like trying to chase a short from here, you take a stop as well because the market took liquidity. And very major liquidity, it's going to make a bigger pullback. Then it consolidated, and this trade right here is absolutely not bad as well. Because then we continue making lower highs, you can see, okay? There's still a lower high, we really didn't pop higher, so the market creates that forward bearish imbalance, and we have a beautiful liquidity available down there. So the market pulls back, gives us the entry, and goes towards the liquidity. So a pretty beautiful development on GU, I would say. Now, I didn't take any trades on GU. I didn't pretty much trade this week because I was away. I had some guests from abroad. But a pretty good development. So let us see. We have this volatile bearish imbalance right here, but the market seems like it's running away. On the weekly time frame, I really love this candle. This candle gives me a little bit more confidence that we can potentially be attacking right now that weekly liquidity. So that to me will be a very good target. Daily time frame as well, like we didn't really form a daily imbalance. You can see kind of the daily candles are pretty chopped up, but we still got a lot of opportunity. The last Friday candle is closing very nicely below this daily swing point. And also, by the way, guys, we could be setting up for a daily bearish imbalance. So I really want to see this. I really want to see a daily bearish imbalance on Tuesday. So I'm going to type it down like that. Okay. And then, of course, if the market crosses this line here, this is the invalidation line, then we're not going to have an imbalance. And then maybe I would have a little bit less confidence to short it. But again, currently, we do have a volatile zone, so the market can potentially pull back and maybe give us a quick short. But I would prefer that Monday consolidates. It creates that daily bearish imbalance. And then on Tuesday, all right, so we kind of have a consolidation here. Tuesday pops in, and then we short towards the liquidity, okay? So I'm really calling like a pretty big short right there, which I'm definitely not sure of, but I truly see, I've seen this a lot of times, right? You get a very big pop and then the market pulls back, and like pure market structure traders would be looking for longs from here, but I also look at order flow and momentum. Okay, I saw that all the imbalances started pointing lower, so I started taking shorts, and right now this is still the case. Right, so if the market really didn't go higher from here, it didn't go higher from here, and it continues to go lower, then to me this liquidity low is very likely. So I am definitely more bearish. I'm definitely more bearish on GU. I just don't know how it's gonna play out. So again, I would prefer that Monday consolidates, pulls back into daily bearish imbalance, and I'm gonna be short. This is also the other scenario, and of course I can give you a long scenario, but I would refrain from that because it really has to do something absolutely crazy for us to go long. So again, we're going to see that as the market opens. Let's see. Let's check out the Aussies. So I see that I was not interested in it. Let's see why. Yeah, well, technically it kind of was making a little bit lower highs. It was also looking a little bit more bullish, but then there we go. The market opened up and absolutely popped lower. So it kind of gave us a little bit of an indication, but in this case, it was manipulation. Okay, and this is why, again, as I always tell you guys, flowing with the market is the absolute #1 skill that you have to learn, according to me. Because we had like this very nice introduction of sellers, then the market makes the imbalance, it taps in, and it gives you a short. Okay, it gives you a pretty quick short from imbalance to liquidity, boom. But then, does it continue going lower with imbalances? No. And what does it make? It absolutely pops higher with a bullish imbalance. So that is, again, kind of a first sign of a reversal, but I do not like taking these trades, because we're still kind of, that can very easily also be a lower high. Okay, and then we can still continue lower, and that bullish move could also be manipulation. So I really then are going to give a lot of confirmation here and require a lot from price to convince me. But then what I see happening is the market entering into an absolutely crazy chop right here. This is a lot of hours. This is a day and a half of consolidation. And then it very slowly make its way higher, and it actually took out the liquidity, the major liquidity here. That is the previous weekly high. Yeah, okay. Not bad. All right, so let's delete everything, see where we are at right now. If I delete this and this, and then we have this volatile bullish imbalance. Do we have something on the weekly? No. Again, this one is a terrible price action, so this is why I'm not really touching Aussie dollar. Ooh, here we have a daily bullish imbalance. Okay, that's not bad. That's not bad, but we're also sweeping this very massive. Is this the previous monthly high as well? Oh, yeah, we are kind of sweeping the previous monthly high, the previous weekly high, the previous kind of old swing highs here on the daily. So really, I need to see a lot of conviction from price. I would have really loved to see like a closure above that high, because how I tackle liquidity is, of course, if you're having a line, okay, and if the market kind of breaks above it, but then it immediately reverses back, this to me is a sweep. So how I would confirm a break is for the market to actually break and stay above, and potentially make an imbalance above the zone. Okay, because this to me tells me that, okay, buyers are definitely willing to stay above that level. Okay, and sellers didn't take over. Like, is this to me a break? It's absolute sweep for now. Okay, if we return back and if we break it with an imbalance, then it would definitely turn into a break. Now this volatile zone is already tapped. We already reacted, and right now we're in an absolute chop, so I wouldn't really take it as something relevant. And we have this daily zone. All right, so again, I can probably say a very nice bullish scenario will be to tap into the daily and then to head for the liquidity. That would be great. And then as for other scenarios, everybody, I mean, yeah, it can do many things. It can immediately pop higher, it can absolutely reverse lower, it can continue to consolidate, we don't know. I do like the longs, I really do like that recent development, but what I do not like is, again, the overall kind of picture of Aussie dollar, all of that chop, and you've seen it many times, right? Just when we kind of start popping, it reverses. Just when we start popping, it reverses, right? Then we start popping again, taking liquidity, we massively reverse. Right now, again, we took liquidity, I wouldn't be surprised if it reverses. So again, I will be monitoring again the opening of the price action. We don't have any volatile zones right now to work with, so if we happen to pull back into this daily, I could entertain a long, but again, in general, I don't like Aussie and NZD. All right, let's check out NU. Pretty much the same. We're getting a massive sweep here of these important highs, and right now we're getting kind of a reversal. We are tapping into that daily reaction area, which is an old area. Let's just first see, did I make any forecasts here? No, because we were pretty much stuck between liquidity here and the market open, and it absolutely cracked into my target, and then it did nothing. Yeah, this is why I just don't touch these pairs. Nothing on the weekly, no imbalances. Daily has a bearish one, so this is where it turns pretty interesting. All right, what did we see? We saw Aussie dollar printing a bullish imbalance, and suddenly we see NZD dollar with a bearish one. This is bad. These two should usually go together, so there is some sort of a manipulation going on right there. Either NZD/USD is gonna flush from that daily imbalance, and then Aussie dollar is absolutely gonna flush, or Aussie dollar is gonna form from its daily imbalance, and then NZD is also gonna pop higher. So again, we're tapping into that daily imbalance, and Friday gave us the beautiful rejection. This looks pretty good, and then we dropped to the volatile time frame, and like, come on, like, what are all these wicks right there? It's crazy. I of course, like, we have a lot of liquidity target. This is the main target. This is the target of the daily. And then of course you can break down some smaller, lower hanging fruits in the form of these swing lows. I would have loved to see like a volatile bearish imbalance, something similar that happened, for example, in Geo last week, right? We were tapping into a daily and the market was already giving us the imbalance here, okay? But you can see in this case, we don't get anything. We're getting a chop. So if you want to go short right now, for example, you don't have a zone. You have to go to the 1 hourly, but guess what? On the 1 hourly, you also don't have anything. So I would really wait for this one to give me some sort of a zone, okay? If it kind of manipulates higher and then it gives me a zone, then I would be looking to short. If it breaks lower and gives me the zone, I would definitely also be looking to take out the liquidity. And then of course, guys, the other scenario will be for us to fully reverse. But for now, I'm gonna stay short biased. I'm gonna stay short biased. This means Aussie dollar can also pull back a little bit to that daily imbalance. To me, it's pretty strange why Aussie dollar is that bullish, but this one is actually making bearish imbalances. But let's see which one is going to prevail. Okay, so I'm gonna be more short biased on NZD/USD. I just need the zone. So anywhere that the zone forms, I'm gonna flow with it. And if the market fully proves me wrong, pops above, I'm gonna be the first one to go long. All right, because to me, it's not about forecasting; it's about reacting and flowing. All right, let's check out Goldie. It was kind of tricky this week, but not that tricky. We did have some trades right here. Now again, how did we start last week? We had a daily bullish and a hourly bearish, and then what I said, okay, let us see if the hourly bearish is gonna fail. Then that will guide us to the liquidity, and let's see if the hourly bearish is gonna hold. Then that is gonna drive us to the opposing liquidity. Boom. Okay, I was not close-minded. I didn't say the market is gonna go higher towards that liquidity. I didn't say the market is gonna flush. I just open the market and I see what happens. What happens? The market, the first thing that it does, it attacks the liquidity. Okay. Now this really sucked. Why? Because it happened during Asia, so I couldn't trade it. Okay. Then we took the liquidity, and what happens? Okay, the market immediately shows me reversal signs. Okay, so what did it do? It actually came up to take this liquidity, but what did it do? Did it break above it very strongly? No, it swept it. Okay, so then trading from this zone is a little bit of a lower probability. This is very similar to trading, for example, from the long zone on AU. Okay, we're sweeping the liquidity highs and we're having a zone. Okay, so immediately right now, look at gold. I'm giving you some gems right here. We swept the liquidity high and we're looking to go long. Okay, and the market absolutely blasts it. Now there were some amazing shorts right here as soon as we saw the failure, which we can actually see it very clearly within candle anatomy, how the first candle came into the imbalance right here and rejected, and then the second candle very strongly closed below. That is to me an imbalance failure, and then the market heads for the opposing side of the liquidity. You see, from liquidity to liquidity to liquidity to liquidity. This is why, again, guys, flowing, I'm gonna keep saying it until it really draws it in your minds. It's all about flowing. It's all about flowing. You cannot forecast that the market is going to do this and this and this and then reverse. No, but absolutely nobody can do this. All right, but you don't need to as well. All right, so and then of course we took the liquidity. There were some more shorts right there, and then there was a long trade. There was a long trade here on Thursday, and then there was also some long trades on Friday. I had a couple of my community members taking on the 15-minute down there, driving us towards the main liquidity that was the previous weekly high. So really not a bad development here. If you think about the overall candle anatomy here, the market opened, it went down, and then it went up. So a pretty nice weekly candle that should be looking bullish with a very nice wick to the downside. So it's still pretty slow. Yeah, it's still pretty slow. This daily imbalance is no longer relevant. What are we doing right now? We are again kind of sweeping a liquidity, and at the same time we are getting a little bit more kind of confirmation for longs because we're getting that daily bullish imbalance. And also if we just zoom out a little bit, all right, and look at very raw market structure, we're having that pop lower. That kind of gave us a little bit of an indication of a trend change maybe, because that came in after higher highs and higher lows. But then we have this potential lower high. Did the market make a lower low? No. So we have this sort of MSS pattern. So if really the market starts staying above this liquidity, I would be interested in going long. Okay, now this is also very fundamentally driven. What I also would like to see on gold is on Monday to form a daily imbalance. So daily imbalance will be formed potentially on Tuesday, and I would definitely love this. All right, I would definitely love this, especially if the market kind of has a body close, let's say, above the liquidity, and then the daily imbalance looks like that. I would absolutely be looking to trade something like this, okay? But that is, again, me making too many forecasts. I don't know how and what is going to happen, but I really do like the bullishness. We also have that volatile zone that can potentially keep price from pushing lower, so it can kind of pull back, maybe give us a reaction, okay? And then it could pull back into the daily on Tuesday and attack the liquidity, okay? So this is, I'm long bias on gold right now. It's really kind of shouting at me. I don't see any shorts. The shorts are really going to come in if that liquidity really turns out to be a very big sweep. We start making some crazy 4-hourly bearish imbalances, but then we still have like these daily ones, so it's going to be pretty hard for price to really flush all the way lower towards the liquidity. So for now, I'm going to be a little bit more one-sided on gold, because I do allow myself from time to time to be like this. And I know you guys like it as well when you get one side. So let's see. Okay, this is it. Forward imbalance. We have a zone actually to work with on a Monday. It can definitely give us a long. Now, will that long really pop higher? This is, I don't know. So if it pulls back into the forward, we can look into it. Maybe take a long. If not, then we look for the daily to form. Okay, on Monday, it has a very high likelihood to form, because it's not going to form if the market really flushes lower. And if it invalidates the imbalance. So it's going to look like that. If Monday's candle looks like this, then I would really start looking to go short, okay? But if Monday's candle looks anything like this, let's say, it's going to be perfect, okay? So that is gold. Long pass, I'm going to be looking for Monday to pass. I'm going to be looking for a new daily bullish to form. I can even be looking to long from these volatile zones. And I'm going to be looking for longs, and I'm going to be tracking very closely the fundamentals of it as well. Let me know what you think about gold. Well, Trump imposed further tariffs on Japan with a deadline, I believe, the 1st of August, and this caused the yen to absolutely drop, which means, again, USD JPY goes higher. So if we study it again, reverse engineer it a little bit, I believe a really beautiful pair to be trading this week. The only JPY that I look at, even in my morning analysis for my private community, is USD JPY. I don't do EJ and GJ. This to me are like, it just makes zero sense to be trading these pairs. But USD JPY, look at that beauty. All right, again, as I keep telling you, we have these bearish imbalances. Are they going to hold and drop us lower? Or are we going to pop right and start getting us higher? Well, the first thing that the market did is that it just absolutely rocketed. It absolutely rocketed, creating all of these forward bullish imbalances. So then it's absolutely no nonsense like bias, right? Bullish bias, forward imbalance, taps in, follows through. Forward imbalance, taps in, follows through, right? Then it actually did not make a new one, which immediately means, okay, it's starting to potentially pull back. It's out of steam. Then you attack the liquidity. It pulls back. This deeper pullback, okay? Back in the days, I would be like, all right, trend change. Let me right now start looking for shorts, because the market made this push lower and it broke structure. No, that is a beautiful long opportunity. Why? Because it's pulling back into a daily zone, okay? So if I delete everything, you see, the market pulls back into a daily zone, and then Friday was incredible, right? Like, come on, use the JPY. So I don't like JPYs, but I'm not gonna lie, this was a beautiful week for USD JPY. And what we're also having is we're having a body closure above the liquidity. Now, what I would immediately say, I want to see a daily imbalance on Monday. So technically, for Monday to not cross the invalidation line, which is that one, to have a daily imbalance to form, and then to trade it on Tuesday going higher. That will be my plan. Okay, so I can immediately, for example, do this, right? Daily imbalance on Tuesday, and then try to go long from it. What I also really like is that the volatile time frame is pretty clear as well. Like, we're ending up the week with a volatile bullish imbalance as well. So that could immediately already start popping price higher. But let's see. Okay, let's see. So we have potentially similar to gold. We have a potential pullback and a continuation higher. We have a potential pullback, maybe kind of give a little bit of a reaction, then form the imbalance, then pull back into the imbalance, and then rocket higher. I will say longs, everybody. I mean, it's super clear longs, as long as Trump doesn't come in tomorrow and say, I'm removing my tariffs from Japan because we reached the deal. Then, of course, it's going to tumble. This is why nowadays it's all about reacting and reading the news and really knowing what is happening on the macro scheme of things. But right now, pretty bullish, and this week was really driven by sentiment. So this is something that I really have to learn, is that the the first time that I actually saw that Trump is going to be imposing these tariffs. I should have known, for example, that this is really gonna drive the yen all week. So then it could have been definitely a good time for me to focus a little bit more on the yen rather than trying to trade, for example, Euro USD. Okay, so really good price action on the yen. I'm bullish bias. Let's see how it plays out. With the volatility, of course, of the yen, EJ and GJ are definitely popping as well. Now, there is EJ, like, it was a little bit uncertain. It had a daily bullish imbalance that I really wanted for the market to tap in. It didn't tap it, and then it just rocketed, right? Without any pullbacks into the volatile zones, though. USD JPY gave us two beautiful setups, right? One right here, and then one right here, and then even one right here. Euro yen, not that much. Probably on Euro yen, you had that deeper pullback into a daily imbalance, so that is potentially where on Friday you can be looking for the pop. All right, so this is kind of, I believe, the only trade, because here this pop you probably have to catch it like on the lower time frame. Okay, but also pretty nice delivery. We're taking the liquidity that we created intra-week, so the market doesn't do that very often, to actually open up, to make a weekly high on Wednesday, to pull back, and then to make a new weekly high on Friday. Okay, that is a rare kind of weekly development. Usually we have like the weekly high or low created on Wednesday, Thursday, and then Friday usually ends up kind of pulling back and doing nothing. But then this Friday was pretty nice. And we're also having volatile bullish imbalances to keep supporting that bias. And we're also potentially, maybe we're going to form a new daily bullish if the market, of course, is not invalidated. But what can I say? I mean, it's looking pretty bullish right now. The positioning is not very good. Why? Because we're taking liquidity. So we really need to see the market pull back a little bit. All right, create clear liquidity here on the top, and then of course give us the entry models and attack the new liquidity like that. Okay, we can definitely look for the daily imbalance as well, similar to USD JPY. So yeah, this one looks pretty similar to USD JPY, but honestly I would just prefer to trade UJ rather than trading a pair like EJ. But also long bias, volatile zone is already here, definitely doesn't look bad. Because GBP USD right now is super weak, okay, and then of course then we have USD JPY strong, then you can see this one is going to be more choppy. Okay, this is why these cross pairs are not amazing, and I would just always recommend just trade USD JPY. Like, why would you trade these two crosses that are pretty choppy, right? So overall, yeah, we did have a very nice pop, and then the market started consolidating overall. You can see Euro Yen, for example, because the Euro is stronger, it actually ended up popping higher, but because the pound, we saw that it's actually quite weak here. We can see beautiful bearish price action. Then that is pushing the GBP yen down a little bit more. So let us give an update right here. Let's check out the weekly real quick. We are trading above this liquidity. So let's see if we're going to break it or sweep it. Dropping onto the daily time frame. Not bad. I mean, this one is tapping into the daily imbalance, but USD JPY already took the high. Euro JPY already took the high. This one hasn't taken it. Now, does that mean that you have to go long right now and go for the liquidity? Absolutely not. Why? Well, because that gives you a signal that if the market is not taking that liquidity yet, then this market is weak. All right, it doesn't have the power to push there. And you can see it kind of came into the daily, it tried, it failed. It tried again, it failed again. All right, so to me, this one is a no-go. Absolutely no-go. Like, if you do see some sort of signs that it wants to go higher, then you could do that. But I would even speculate that it will come to, again, to take out that liquidity, especially if GU keeps carrying on lower. This one is also going to carry on low. So to me, guys, GJ, I really don't like it. I really don't like it in terms of its, how do I say, I mean, the overall psychology behind these cross pairs, I don't like. I've traded crosses and I've had a really bad experience with them, so I don't do it anymore. And I also just wholeheartedly recommend you also do the same. So that's GJ. All right. Let's have a look at the index futures. Now again, they are also extremely hard to forecast, especially on the hard time frames, and this is why I do not trade them with the way I trade Forex. With Forex, I do a little bit more of a forecasting again type of trading, although again I'm really good with flowing, and this is how I actually trade. But this one is just pure flow. All right, open up the charts. Where are we going? Where is liquidity? Where could we potentially go right now? And then I trade it. Now, the development was not bad. We kind of did have these volatile bearish imbalances. The market pulled back into them, and Monday was a pretty good day because we sold off very nicely into that daily zone, and then we started accumulating very slowly. And then you can see in terms of structure again, we did make that higher low, higher high formation. Okay, so this market structure shift, we pushed lower low, This is a lower high. We tried to sell off. We did not break the low, but then we broke structure and made a higher high. And not only that, but we also made a quality bullish imbalance right here. So that was potentially, it was not a long day because this is the candle that I'm trading, the 17 o'clock. That is the 10 a.m. New York time. It sold off towards that quality zone and then we chopped up. But then Thursday was an incredible day to trade. I was away this week, as I told you, but my not my community, but I have my friend who we designed the future strategy together. He took some amazing trades here, and we did take some amazing trades on Monday as well, while Tuesday and Wednesday were a little bit chopped up. So let's see, we are taking all-time highs again, and we are rejecting away from it. On the weekly time frame, we have like these 2 weekly imbalances right now. So I kind of really feel like we could pull back into these. I would definitely love for that. And another sign for that is that, again, we are sweeping the all-time highs again, and we're not making a new daily bullish imbalance to tell us, okay, we are ready to continue going higher. So to me, like, for example, this one is going to be a pretty interesting liquidity down there. And then if I drop to the 40 time frame again, like we came in, we swept it, okay, but then we still had that imbalance, but this one fully flipped as well, and it created a bearish one, and that bearish one was tapped into the very final hours of Friday, okay. I really like short in this case, but it's not a very high probability trade yet. Okay, when is it going to be a high probability? When we break this low. So if the market truly shows us in this case this pattern, right? So from so we have a high, we have a low. If this is truly a lower high, how do we know if it's a lower high? If it makes a lower low, okay? Then if we do this, I will definitely target these lower liquidity points. So for example, that one is going to be the first one. Then we potentially give a little pullback and then we attack the weekly imbalance. That will be a great weekly development. And if the market, of course, decides to go a little bit stronger, then it's going to fail that imbalance. And then, of course, we can continue going higher. So these are going to be my 2 scenarios on ES in this case. I would prefer the bearish one simply because, I mean, it's not about what I prefer, but what actually happens. Because, for example, in this case, I would put for example, my expectations and even my kind of desires, because what I would love to see is for the market to make a deeper pullback. So then I have a lot of space to trade it towards all-time highs. Okay, and I can even buy some more stocks down there. But of course, it's not about what I want, right? It's all about what the market does. So I'm gonna wait to see what it does. I am not fully 100% short yet, but if you do start seeing the bearish signs, I will definitely target these liquidity points and the weekly imbalance. Okay, so that's ES. Let's see how the others are looking like. Well, honestly, Nasdaq was pretty chopped up. Like, look at this price action right there. I think ES was a lot better. It was a little bit smoother. But yeah, here we also pull back into this daily zone and we kind of accumulated. We actually popped on Wednesday. And then on Thursday, we didn't get a pop, which is when the best trading day for ES was. So yes, it seems like the tech stocks are a little bit, I mean, they are a little bit more above all-time highs. But yeah, let's see. So we are not also making a new weekly bullish imbalance, okay? And it was pretty, you can see the weekly candle, right? Absolutely small weekly candle, almost an inside bar as well. So a pretty sluggish week here. So what are we gonna do next week? Are we gonna pull back into the weekly? Are we gonna pop higher? We don't know. Do we have something on the daily? We don't, right? We do have, for example, this liquidity point that is going to be nice. And then we have the liquidity point that is within the weekly imbalance. Do we have any clues on the quality time frame? Well, similarly to ES, we kind of have this quality imbalance, but to me, it just looks pretty choppy here. It's very compressed. The candles are very wicky. Like we have price actions that look like this. It's lacking the volume, so I would I like ES a lot more in this case. But again, if this one like starts guiding us lower, then I would attack the first available liquidity. And then if it of course continues to really go lower, then I would be targeting that major liquidity point. But I am gonna be focusing more on ES because I read ES a little bit better. It's kind of giving me better price action right now. So I wouldn't really focus on Nasdaq until it gets a little bit more cleaner. We're sweeping as well here. We're getting some bearishness, but it's again, as you saw on the weekly candle right now, we are pretty much consolidating. So I would look for an exit out of that consolidation and then flow with the market. So not looking great, Nasdaq. YM or US30 also pretty volatile. So we kind of popped higher a little bit, but we didn't really make any imbalances to guide us higher. and then the market absolutely dumped, and then it gave us a short. So again, if you just flow with the market, right, you see the market popping higher, but does it give you any zones to go long? No. And then it flushes and it gives you a short zone, but that was into a daily imbalance, so this short zone is a lower probability one, but still ended up following through. Then it gave us a long zone right there again from the daily there, that was the long. And then on Thursday we really nicely popped, but then we reversed all the way back down again. So overall kind of indecision, and this one did not take out the highs. So again, I have actually a chart that monitors ES, NQ, and YM. Like ES in this case took out the highs, YM also took out the highs, right? But sorry, NQ also took out the highs, but YM did not. So that kind of signifies that there is some sort of a weakness in the market. This is why I can kind of feel maybe a little pullback incoming, because the market is getting pretty chopped up here. You can see in this case, YM is showing us some lower highs, which is good. So let's see, do we have any zones? However, yeah, we do have a very small zone right there in the 40 time frame. We also had one above, which also could get tapped in. Do we have something on the weekly? Oh, we actually have, yeah, a weekly bullish imbalance here, which is also pretty good. So we can be looking on ES and YM, a pullback into that weekly zone, and then from there, is it gonna start popping higher? That is again outside of our control. But of course, for example, if we're trading futures on a Monday, let's say, although it's trading a day before CPI, so probably not the best day to be trading, we can be looking for like a very quick short trade into that weekly imbalance. And then from there, again, what happens? This is outside of my control, and it's also outside of yours, right? Is it really going to reverse, right, and start popping higher? Is it going to flush towards the lower imbalances? We don't know. Okay, so let's see. I do see a lot of bearishness. I do see a bearish signal across the indices, so I might try to take some shorts into these weekly imbalances, but I'm only going to do that if I'm given the signs. Okay, so that is US 30, a little bit more bearish. Let's see if they're going to pull back into these weekly imbalances this week. All right, it seems like a good week for the DAX traders right there. We absolutely rocketed to all-time highs. Yeah, pretty nice. Very, very nice. We actually got here a quality tap. That's a long trade, and this one is a long trade as well. Good job. Good job for the DAX traders if some of you guys are trading it, because I don't. We have this, again, sweep of all-time highs. We don't have a new weekly imbalance. On the this Friday candle is pretty sketchy because we had this daily bullish imbalance, but the market is kind of really breaking below it, and we're tapping into the second one. But at the same time, this kind of daily candle is really nicely setting up for a potential daily bearish imbalance on Tuesday. Okay, so if that happens, then I would be pretty hesitant to be taking longs. Okay, but let's see. All right, so you kind of had the massive week already. All-time highs is taken, so right now, of course, you can start dropping onto the volatile time frame to look again for the market to align back. Again, like I always say, the transition area is always the bad place to trade. Wait for the market to show you that it actually wants to go higher. You're going to get your trade. So right now, if the market is going to go lower, it's going to enter into a transition area, and then it's going to go higher. So your best trades are going to be when the market is super clear. So let's wait to see if Tuesday forms, if Monday forms a daily bearish imbalance, you're going to start getting into a little bit of a 50-50 situation, right? Because you're looking at bullishness here, you're looking at bullish structure, and you're having like the bullish order block right there, but then you're having a lot of sellers entering the market after that sweep. So how do you usually tackle that one? Well, you wait for the sellers to show failure, come in, react, break, right, and then start attacking all-time highs again. I'm definitely not sure of that bias because I also see that the US indices are potentially looking like a pullback, but this is how I would read DAX. All right, just as a little recap, the majors are not looking amazing. Like, for example, the DXY is not giving us a clear zone, so we really have to apply the flow with the market principle right here. Wait to see where it guides us, and I have been teaching you how to do this in the very latest weekly outlooks. Euro USD as well, like it has this poverty zone, but how is it going to play out? We don't know because it kind of closed up pretty choppy. GU is definitely a lot more bearish, so I'm more one-sided on GU, especially if it forms a daily bearish imbalance here. I would try to short it on a Tuesday. Okay, so Monday forms a daily bearish imbalance. I'll be looking for shorts later on. Aussie dollar and NZD dollar I don't like because Aussie dollar is looking bullish with a daily bullish imbalance but sweeping that crazy liquidity. Meanwhile, NZD USD is bearish with a daily bearish imbalance and looking like it wants to flush. So which one is going to be right? I'm definitely looking for shorts on NU, but AU is kind of looking like long. So these two pairs, 50-50. Gold is also looking pretty good for longs right now. We're starting to pick up with a lot of bullish steam. Now the positioning is really bad because we took out that crazy liquidity right now, but we have bullish zones. We have this volatile zone, and if the market forms a daily bullish imbalance here on Monday, so I'm gonna definitely trade it on Tuesday. So I'm looking for an imbalance here to form, and I'm gonna look to take a long on Tuesday, Wednesday, Thursday. Okay. So I'm long bias on gold, USD JPY. I'm also long bias, which is looking pretty good. I'm also looking for a daily bullish imbalance here to form on Monday and then trade it on Tuesday. We're having a very clear closure above the liquidity. We're having also volatile zone. Looks very nice for longs. EJ also looks very nice for longs, but I wouldn't trade these two. GJ definitely skip because this one is giving us signs that it really doesn't want to pop higher. And indices are also pretty interesting. I am having a little bit of a feeling that we might have a pullback into weekly imbalances. So I'm looking for a little bit more signs that it actually wants to do this. Okay, ES is giving us first signs by this volatile bearish imbalance already responding. So I will try, for example, to capitalize on some short trades until that liquidity. I like ES a lot more because Nasdaq is kind of a little bit chopped up here, but it's also giving the same signs. And also YM gives a confirmation of my suspicion for a potential pullback because we're making lower highs here coming from the top. And that is pretty important, which can cause the rest of the US indices to also tumble a little bit. And DAX already took out all-time highs. Right now it's in a pullback, so you just have to wait for the market to again set up for the longs again and attack new all-time highs. Okay, so that's it for this week, guys. Let me know how you performed. Let me know what are your favorite setups going forward into this week. Let me know what kind of trades you took, and I wish you good luck and good trading into the incoming one. And I'm gonna catch up with you on the next outlook.